You're watching Stockwatch. I'm Simon Brown. Joining me to unpack your stock-related questions today, Devin Shutte from Robert Group, Cobus Potgieter from Southern Cross Capital. Be sure to send your questions through email stockwatch@bdtv.co.za, SMS 41392, or on Twitter at BusinessDayTV, #Stockwatch. Gents, thanks for the time today. I suppose let's go back to some stuff that came on Friday. Devin, let's start with you. Aspen trading update. I mean, I got two thoughts for it. One is they kind of seem to have kitchen sinked it. If it moved, they wrote it down. And then I was surprised that the market was so surprised. Devin, your thoughts on the update and on potential for Aspen?
Yeah, I mean, it did feel like if there was any bad news that they had in the closet, that they were going to throw it out there. So, yeah, I mean, it's just I don't know if the market has regained any kind of confidence in the company yet. I think it's still recovering from that shock in April with the contractual dispute there. Yeah, and I think that still remains unsolved. We don't have details of that. And, as a result, now they've got some additions to their woes. They've got some changes to tax legislation coming out of Mauritius. So that's gonna hurt. And yeah, I mean, I think there were one or two positives in the kind of updates I tried to look for. But yeah, I mean, I think it's really going to be a long road back from here. You could argue that there's showing value here, but I think there's just too many uncertainties in the business model at the moment to really rush in. So, I mean, it's one we're watching, but wow, they really are in a tough space at the moment.
They are. Cobus, for you, I mean, it was. I mean, it's hard to find any positives there, except that at 100 Rand, maybe there's some value, or just over 100. Cobus, Aspen, for you?
I'd wait for this next set of results, honestly. And I suppose just to agree with Devin there in terms of market confidence, a management team that is already sort of, stands accused of poor transparency, being handcuffed in terms of providing the market with more transparency around this dispute in particular because of the nature of the underlying agreement. So, a difficult one. Those positives, specifically around pipeline, at the best could start positively contributing to earnings towards the end of financial year 2026. So you're taking quite a long view and with very little information, because we're not going to get the level of disclosure, the level of information we want until we've seen the results, which this trading statement obviously points towards. So from that perspective, I'm still sitting out for the moment. But I agree with you. It is perhaps starting to show some sort of fair value. We just need more information to confirm that.
Yeah, it's going to be, maybe that's it. There's some value here, but how long until we get it? Cobus, rather, let's stay with you. Grindrod, not bad results coming out on Friday, and then the announcement that they've got the opportunity with the new rail deal from Transnet. That's probably still a year or so away, but good news for them. Your thoughts on Grindrod generally? The market is liking them. The challenges they had last year with Mozambican violence seems to have moved away. Cobus, Grindrod, for you?
So there was a partial recovery in the Maputo port, and they've doubled down in terms of buying out minorities at one of the terminals there. So a great set of results, well managed business, and we always complain about private companies being slow to invest into South Africa, but this company is essentially taking the opposite approach. They are repatriating locomotives from Sierra Leone, which they believe will be well suited to the northeast corridor, where they've been allocated capacity going forward. This is quite positive, I mean that shows quite a bit of bullishness in terms of the overall results. Of course, very good. The special dividend off the back of selling off those non-core businesses, the fuel business, also very positive. So the market likes this all around. And frankly, given that those earnings are still a little bit suppressed from the unrest in Mozambique, some upside remains. I still like Grindrod. Nice, well-run business, and not a demanding valuation at all.
Yeah, it is not a demanding valuation. Devin, for you, Grindrod, not a big valuation and some good potential?
Yes, agreed. I mean, I think Cobus hit the nail on the head. I think this company has been able to weather some difficult trading environments, the civil unrest that he mentioned. Just generally running a business like this in a trade war environment can't be easy. But yeah, we really saw that strong rebound in the ports and terminal segment. And I think executing well, where others maybe are struggling. So yeah, shareholders chair the special divvy. We'll take that any day. But yeah, overall, good set of numbers.
And I mean, the big story, perhaps, aside from the Grindrod, Devin, is the fact that Transnet is, I mean, essentially moving forward with privatization. We've seen some green shoots. It's going to take time. This is good for, I mean, a lot of the South African economy.
It's massive. I mean, there were headlines last week about slots being sold on the network of Transnet. I think we can't overestimate how important those network logistics are to just getting the wheels of our economy going again. Sasol was a beneficiary from a Transnet settlement recently. Maybe we can go into that thing. I think generally being such a big producer of commodities and our industrial companies really struggling to get their goods to market. I think it's a non-negotiable, and it really is encouraging to see the positive directional signs. But Simon, I think we've still got a way to go, but yeah, at least the right direction.
Yeah, I mean, Cobus, that is it. I mean, because my head was now going to where's the investment opportunity. It's going to be slow and incremental. It's not in 5 years we'll look back, but at this point I'm not sure that we can rush out and say here's a winner and create an investment case around it.
No. I guess that's the nature of investing. It is uncertain. Are you talking about Grindrod or Sasol now? I'm curious.
Well, let's kick that Sasol door open. Devin, you mentioned their results out.
Yes.
Look, the market is loving it. The stock is now up another 10% today. It had a really strong week last week. Strong free cash flow, 12 billion. Of course, 4.3 billion of that is the Transnet settlement. Is Sasol out of the woods? Is it investable? Is it too late? Is it best just to watch from the sidelines?
Look, I think it feels like it's getting out of the woods. I think the headline earnings growth for these results was above the midpoint of their guidance. Revenue was lower, but there were a couple of tailwinds that kind of came together in these set of numbers. You mentioned the Transnet settlement, which they would gladly take. Mm-hmm. There were some provisions that were released, some low impairments. You also mentioned that nice bump up in free cash flow, and also paying down the debt. So we aren't at a point where they're going to get dividends yet. I think they still got to get the debt below $3 billion, if I remember correctly. But yeah, overall not a bad set of results. Maybe slightly flattered by a decline in the rand oil price, but yeah, really, I think starting to do the right things. But yeah, again, this is not an overnight story. I think still a long way to go, but maybe one of those cases where shareholders are starting to gain a bit more confidence in the management team.
Yeah, look, and brave shareholders have doubled their money already. I was not one of those. Cobus, Sasol for you?
Yes, small tailwinds, a little bit of luck, a little bit of a small reduction in working capital, and like David mentioned, the release of the rehabilitation provision, also supporting that free cash flow situation. I think the market likes seeing less hemorrhaging, given that Sasol remains a play on the optionality. Essentially, we need the value, the value of their outputs to increase. We need the rand price of petrol to increase, and we need those essentially chemical supply to come off, so that they can no longer be a marginal supplier. They to demand being less overwhelmed by supply, as is expected to be the case for the next 5 years, given expanding supply in China. But that's essentially ultimately what it comes down to. Sasol needs to achieve a higher price for chemicals, and they need a higher price of oil, and then there's a heck of a lot of operational leverage, and the share price could double or quadruple or whatever you like. But unfortunately, it is a bit distressed, and I suppose the market likes seeing things settling down a little bit, operationally at least.
Yeah, a little distressed. Yeah. Although I suppose the big point is maybe it's out of the woods, but it's not perhaps out of the battle, so to speak. Cobus, we had Advertech results out this morning. We had the Kira update on Friday. The Kira update, for me, the big line was losing learners, I think 1 point something % lower. Your thoughts on the two education stocks, notably Advertech with the numbers today, which market is liking?
Quality versus quantity, and I believe we seem to come up against this question often. Yeah. Advertech versus Kiro, and Kiro, of course, went for very aggressive acquisitive growth, perhaps at a lower point in the value chain, acquiring land, for development. And part of what we're seeing here is a significant write down in some of those property development acquisitions that they've made. Earnings essentially are forecast to remain flat period over period, versus Advertech somewhat higher, somewhat better integrated into the tertiary side of the education industry, and conservatively managed, increasing headline earnings by 15%. That's just the quality name, and it should, on a relative basis, attract a quality premium.
Yeah, and a gentle excursion into East Africa. Devin, your thoughts on the Advertech Kira debate? The consensus is typically it's Advertech. Your take on the numbers?
Yeah, I agree. I think it's Advertech. I think Kiro is just not getting the bums on seats that they were forecasting. That's a massive cash burn on businesses that have huge fixed infrastructure like that. I'm not too sure the drivers for it. Is it maybe slower population growth? Is it affordability? Is it something else? But bottom line is they're really starting to hurt. Whereas Advertech just seems to keep on delivering. I mean, as Cobus said, HEPS up 15%, nice increase in the divvy there, and continuing to generate strong cash out of the business. So yeah, I think also their portfolio of brands seems to resonate well with their target market. And I think you kind of wrap all of that up, and yeah, you've got a quality proposition compared to one that's really kind of struggling a lot more.
And then is it worth adding some Stadio to the mix? Because Stadio is doing well, of course, tertiary only, a lot of it distance. Getting nods from both of you. Devin, worth adding some Stadio too?
Yeah, potentially. I mean, I think tertiary education is such a prized commodity at the moment. We're seeing how competitive the job market is for school leavers, and the need to differentiate yourself and specialize. And I think they've got kind of the breadth of offering right in terms of tertiary. They've got the blend of contact as well as online. And yeah, I think the pricing points are probably acceptable to the market. So I think they're in a really good space. It's difficult to compete. It's also a highly regulated environment. Education, you've got to have all the requisite accreditations in that regard. So I think a nice moat for that business. So yeah, one we also like.
Cobus, would you concur on Stadio?
Yes, not much to add to what Devin had said already. I suppose to some extent, it's the best of what you get inside of Advertech. And despite that being relatively moated, I think the model has now been demonstrated to be quite feasible and quite attractive, and frankly quicker to monetize in terms of investment pipeline than the primary and secondary school systems. So very attractive business, and trading statement we saw last week indicating for headline earnings to be up, I think, between 22 and 26% in this half year. And this is while they're still in a heavy investing into the business quite heavily. So from that perspective, still looks very attractive, and I believe Stadio is rallying today off the back of the Advertech results. So the market seems to like it as well.
Yeah, no, it is rallying. Something that's rallying, up almost 7% as we record. Italtile results, to my mind, it was very much more around, a lot of it was managing costs. It's a tough environment out there for Italtile. Cobus, for you, Italtile, there was a report out from Better Bond last week around how homeowners, they're seeing a lot more sort of DIY and stuff happening at home, but we're not necessarily seeing it in any of the listed companies yet.
Yes. it's a much loved uncovered small cap. It's funny how much we find ourselves speaking about it, given the low liquidity, zero analyst coverage. But same as always, a very well run business in a very, very difficult sector. I like how we found, always seem to expect management to act as a sort of quasi forward-looking economists for the domestic economy, and of course expressing their views around tariffs and the like, given that they are subject to them in the rest of sub-Saharan Africa. But excellent, well-run business, and if you believe in the thesis of slowly improving consumer outlook locally. And hopefully more consumer and investor friendly policies going forward. This business is pretty well positioned for that, and is well priced as well.
Yeah, absolutely. And it is illiquid. I mean, today just over R1 million, which is perhaps actually not a bad day for them. Devin, your thoughts on Italtile?
Yeah, I mean, it's interesting. I think they are executing well in a tough environment. Turnover, earnings all flat-ish. Marginal increase in the divvy. It was interesting to see Bloomberg flash earlier a headline that they really bemoaning the South African trading environment for industrial companies and just how hard it is. And I do have real sympathy for that. And so, when the macro is out of your control, you do have to look internally. And as you said, cost control has been massive for them. What I have liked is kind of also the softer issues in the business. They focus on leadership. They mentioned that their people are the biggest assets, and that's something they've consistently enforced. So I think it's more than just marketing speak. But yeah, I mean, and until the consumer really starts to feel a little wealthier and starts to open up their wallet and do those renovations like we saw post-COVID, I struggle to see the real growth drivers for this group, albeit very well managed.
Yeah, feel and also be a little bit wealthier. And I suppose we're better off than a year, 2, 3, 4 ago, as we keep on saying. But it's still way tough out there. Devin, we'll stay with you a moment. Momentum results out.
Yes.
This is one that is fairly well loved, although not so much by the market. Your take on the numbers?
Yeah, I mean, I think the numbers were respectable. How I like to look at these big life insurers is they're really geared market plays because of all the investment assets they hold to be able to pay out claims and the likes from the premiums they take in. And so when underlying markets do well, and here's the key at UJC, they really have a good boost to their performance. So I think that was probably one of the biggest drivers of the results. But HEPS up a significant 45 to 55%. Lifebook doing particularly well there. They also managed to keep claims down, which always helps, and also some nice underwriting profits there. So I think kind of broad-based contribution, but I think probably the biggest heavy lifting came from buoyant financial markets.
Yeah, because they hold those equities and that helps. Cobus, your take on momentum and the numbers that they released?
It's difficult to say. I think Devin's covered everything we have in the trading segment. I mean, it's just guided earnings, right? So we don't get color beyond the commentary given, and they essentially indicated that it was broad based. But I agree, there is a particular optionality in the fact that they are invested into the market, and like we saw with the likes of Liberty when it was still a separate listing, there was a high correlation between, call it Swick's performance and the operational performance of that P&L that the business would ultimately produce. The market largely expected these results. It rallied initially and sold off the back of that. So this has been a stellar outperformer within the sector, and there has been, pardon the pun, but there has been a lot of underlying earnings momentum in this name. So perhaps growing into that valuation now, and it'll be interesting to see the mix once we do get results from them.
Yeah, I agreed on that. Perhaps some more color. MTN, Cobus question coming through. Please ask your esteemed panel, that's you two, their thoughts on MTN. It's had a spectacular run. We've seen some numbers. Cobus, MTN for you?
I think I was quite disappointed by the performance of the South African operation. And given that the turnaround strategy for that is only expected to essentially stop hemorrhaging subscribers in 3 years' time, that's a tough call. And we back to that situation where Nigeria is now again bigger than South Africa in their lives, and we know that's a highly cyclical, resource-driven market, and of course subject to enormous regulatory risk. So I'm not at this stage particularly fond of MTN. I miss the last rally, and not really interested in participating now, given how far it has come already. And it feels like there's always some execution uncertainty, another scandal around the corner, another investigation, as we see being alluded to at the moment in some of the other markets in the Middle East as well. So at current valuations, no. It's one of those things I like when it's particularly beaten down as a little bit of cheap optionality, but not at the moment. It's a little bit downbeat, and I believe the likes of Cell C and Telkom are starting to eat its lunch.
Yeah, and it's the sort of stock you always think it will one day be downbeaten, to your point, and there's some challenges there. Devin, MTN for you?
Yeah, short story, not a fan. I think fairly low quality business. I think massive amounts of capex needs to go into a business like this. Overlay that with the political and regulatory risk that they constantly seem to fall foul of. Irancell being the latest there that's getting shareholders concerned. Yeah, I just struggle to see the long-term glide path for a business like this. I think you'll have fits and surges of share price appreciation like we have had, but yeah, not a buy and hold for me. I also think not the strongest balance sheet, and probably better places to deploy capital.
Yeah, no, I concur with both of you, and maybe when it's beaten down, but then truthfully I look at it when it's beaten down and I still think, nah, maybe not today. Devin, I'm going to pick your brain. Question coming through around MultiChoice. Does the panel have any insights what happens to MultiChoice shares if one elects to retain them? I can't remember. I read those documents so long ago. I mean, if the option is there and you keep unlisted, Devin, I'm never a fan of unlisted. What's your thought?
Yeah, no, I mean, if that is the option, if you choose to hold your shares, I think it's not preferable. You're sadly in the vagaries of private equity. You're going to need to find liquidity. Pricing can also be an issue. So, yeah, I would say, if you went into MultiChoice, that's not one of the things you signed up for. You could like the long-term case in it, but unfortunately that option's to be in the public equity has been taken away from you. So, yeah, not one we're going to hold on through the takeout.
Cobus, do you like unlisted?
I wouldn't hold it unlisted because I told you so on a television show. There is, however, some nuances to it. Would it be allowed to be unlisted? I'll have to go dig in the circular again.
Yeah, I can't remember.
We have a squeeze-out provision in the Companies Act, and if you control more than 90% through this transaction, you can force selling.
Yeah.
That minority shareholder that elects not to participate can then go and exercise their rights to appraisal, and perhaps again, you'll temporarily move into that unlisted space, and perhaps if you have got the muscle and you have got the scale and you've got the cash and you've got a strong argument, you could be able to squeeze them for a slightly higher settlement. I haven't looked at the particularities of this case, but so I'm not certain around whether or not one even has the option of going unlisted here. But there are some mechanisms for activist shareholders to squeeze additional value from going into that.
I'm going to leave you there because we need to get to stock picks and a lot of perhaps is there. We need stock picks. Cobus, Naspers.
Naspers, yes. It's sort of my favorite locally available play on AI, I suppose, and it has been a barnstormer performer. But we track the discount over time, both the discount relative to Process and the discount relative to Tencent, and that the discount relative to Process in particular has moved to the widest level we've seen in the last 24 months or so since they started aggressively buying back shares, and that has historically been quite a bullish sign for acquiring Naspers fair. So even though I'm long both Tencent, Prosus, and Naspers, that becomes my preferred vehicle, and I'd switch all of that exposure into Naspers at this level simply because it's presenting more upside from that sort of technical discount level, because there has been more liquidity seeking from the Naspers shareholders relative to the two other names.
Yeah.
And that just makes it the cheapest entry point into that 10-cent opportunity.
Yeah, and that discount does get at points wide. Devin Shutte, Makita Libra, kind of the Amazon of South America / emerging markets.
Yeah, that's right. A fellow commentator once said if Amazon and PayPal went to Latin America to have a baby, that would be Mercado Libre. And yeah, they're great. They've got a lot of revenue coming from commerce, about 55%, and then a big fintech arm, so hence the kind of PayPal and eBay similarities there. They're dominant in about 18 countries. And I think what I really like about them is their logistical network they've set up.
Yeah.
Huge capex going in their last financial year, about $9 billion. And that just creates a massive moat that's very difficult to replicate. Strong balance sheet, lots of cash, low debt, and great margins. So, yeah, one to watch.
Yeah, founded in 99, Argentina, but a massive success story. That's all for Stockwatch today. Thanks to our guests, Devin Shutte, the Robert Group, Cobus, Potgieter, Southern Cross Capital. Up next, The Close. Stay watching.